What's going on, everybody? My name is Drew Bishop and welcome to my new YouTube video. And in today's video, what I've got for you guys is first and foremost a live analysis on the dollar yen. But the point of this video is to talk about the difference between making a Forex analysis or making a trading prediction and then be able to trade that prediction, right? Being able to have that actual trade that goes in line with your prediction. So I think this concept happens a lot where you make a prediction, a lot of things align where you say, hey, this is going to happen, but it doesn't mean it always necessarily fits your rule style, fit your trading plan, or is a tradable opportunity. So what I want to do for you guys today is basically dive into what I think is going to happen on the dollar yen and then kind of talk about why I can't trade this based on my style. Now, it doesn't mean it's for you. Obviously, you still can, but I think there's a big difference between making an analysis or making a prediction and then being able to trade that. So what I want to do is make the analysis first and then talk about why I can't trade this analysis. So with that being said, let's start on the daily time frame. And what I want to do on the daily time frame, for me, I always use top-down analysis. And when I'm using the daily time frame, I like to figure out what's going on. I want to figure out, kind of get a broad picture of what's happening right now. And most recently, we are trading at this level of support. And if you're new to trading, if you're new to investing in general, a level of support is nothing more than when the buyers found support, right? We made this big sell-off where the bears pushed price down to here, or the sellers. The buyers pushed it up, meaning that they found support in the market to stop this move. Same thing here, right? The sellers pushed it down. The buyers once again pushed it up. So just between these two most recent pushes, right? Let me mark them off. Let me draw them. Let me kind of draw my swings. And feel free to do this on your charts, right? You've got these tools for a reason. So we noticed what? We noticed we made continual lows, right? We came to retest this low. We came to retest this low. But there's one difference. There's one difference between these two most recent moves. So I'm going to give you guys a second. Look at the price chart and kind of see what you think. Kind of see what you think's going on. So for me, the difference in what I see is this. Here's my first high. What I mean by my first high is here's the push to support. We pushed off. We came to here, right? Now we came back down to retest the same zone, making equal lows. But notice the difference now. Notice this high right here. So what's the difference between these two highs? Well, we didn't make it near as high on the second push off this level of support, right? And if you're somebody that uses trend lines, here would be a great, you could use this trend line right here. Kind of show that squeeze, right? I don't use trend lines, so I'm just going to go ahead and delete it. But if you do, that would be a great time to use one. So what I'm seeing right now is basically a push down. A level of support has been created. I see the buyers or the bulls push off, where the sellers push price down. I see the second time the buyers push price up. Now the sellers do what? They push price back down to this same level, showing me that we did not retake this same high. Right? We did not retake this same high. We made a lower high. So with this in mind, now what I would anticipate is a break below structure. Why? Because based on the story of what I'm reading here, I'm not seeing the bulls push up as high on this second level, right? So what I like to anticipate is, I like to picture these as like a wall, right? There's a battle going on between both the bulls and the bears. And these little structure levels or support or resistance levels are like little walls in a battle, right? And the more time a wall gets tested is the higher chance this wall has to break, right? The more times something keeps getting attacked, is the more times that it has to get taken over, right? So this is basically the wall of the bulls, right? It keeps getting attacked by the bears. And what we saw this second time is less bulls came into the market to fight them off. Compared to here, we had a good push, right? Now this time, we had less bulls push them off this little wall or this little level of support, whatever you want to call it. So with that in mind, what I'm anticipating now is a break of this structure level. I'm anticipating a break of these lows. So by making that prediction, you should be able to make a trade, right? I'm predicting a break below structure. I'm creating a story. I'm making an analysis. But the point of this whole video is what is the difference between making a Forex prediction and then being able to trade that prediction. So for me, the next thing I want to do is make my prediction and where I anticipate price to go to next. So I've already predicted I think there's going to be a break below this level of support, right? I'm making that analysis. Now, what I want to look out and see is look left and look for the next area of structure. So I'm going to look left over here. And what do I see? I see another level of structure right here. So let's walk through the story of this price action. So the market pushed down. The bulls pushed it up. The bears pushed price back down, right, with this wick. And then the bulls pushed it up. So what do I know now? I know that right here is another level where where the bulls found some support. Right? They found some support right here. That's why I want to make this green. I want to make this green. So now here's the problem. And here's when the difference between trading and making an analysis comes to play. So for me, and this only it only really applies to you if you hold value or if market structure holds value to you. So for me, market structure is pretty much the centerpiece of my whole entire trading plan. And so what I anticipate is a break below structure, right? I anticipate this level right here to be broken. I'm anticipating this level of support to be broken. But the problem is, when I look left, what do I notice? I notice another level of support. So we're trading at another level of support. So though I anticipate a break below of this first level, right? It doesn't mean I can trade it based on my trading plan, because when trading at level of support, I anticipate the buyers to push price up or the buying orders to flood into the market. So with that being said, here's the difference in making an analysis and making a prediction. So what I analyze is that this is going to happen. And this is what I like to call a red light break of structure, or a break of support. So I'm anticipating this break of support, right? I'm anticipating this break of support. But I cannot trade it because of the fact that we're trading at another overlapping level of structure support as well, right? So the difference in this is, yes, my analysis is telling me, my prediction is telling me that I see a push to the downside, right? But my trading plan and the way I analyze the market tells me, hey, it doesn't mean I can still trade it. So yes, I still do anticipate that level of support to be broken. I think the seller is going to move price down, but I can't trade it because of the level in which is over to the left, right? The overlapping level of structure. So I think this happens a lot. And a lot of times in our trading, we make predictions, we build a story, we build a case, whatever it may be, and we say, hey, I think this is going to happen. I think this could happen, but it doesn't mean that you can always trade it. And so this is a great example, in my opinion, of reading the story of price action, seeing how there is a level of structure here, support, that keeps getting retested, right? But we see the bulls did not hold off this wall near as good the second time before we came to retest this wall. So because of the story of price action, we're anticipating a break below this wall here, or this level of support, right? But because of the fact that I have a trading plan and I have to follow my rules, I can't sell into support. So because we have this overlapping level of support, it doesn't mean I can still sell this market and make this a tradable opportunity, right? So I want to make this video because I think this happens, at least in my career, a lot, where I make a good analysis, I read the story of price, I make a prediction, but I'm not able to always trade that prediction. So I think it's important to have this stuff addressed, because I think it happens all the time. We just kind of let it go. We might force a trade, right? This might say, hey, to me, yes, I think there's still structural support to the left, but given the way price is reacting, I think we're going to make a big push down regardless. You know what I'm saying? So you got to have those rules. You got to be disciplined to stick to yourself and understand that really good opportunities don't last all the time, right? They don't always come. So when they do, you want to make sure you have your full capital, your full account to take advantage of them and not waste them on these trading opportunities that you're making work, right? So I hope this helps. Hope you guys enjoyed the video. If you do, please feel free to hit the like button, subscribe to the channel, leave a comment with a difference of opinion or what you might think. And with that being said, I'll talk to you later in the week.